Alrighty. It's the 16th of January, 9 o'clock Eastern, 9 a.m. Eastern. And we are at session 10 for the Precision Traders Group. And looking at who's here. Nice group. Got consistency. See, I can always tell who's going to make it by the level of consistency. Now, I know people can't make it because of work and, family and school and everything else, but of the group that can, I hear you, Jake. I got a little spoiled over the vacation and also because I was sick. That I wasn't doing well. When I was really sick, I wasn't doing any trading, and I still am only coming back about 50%. Nothing like Atlanta traffic. Hot Atlanta. Nice storm in Houston. There you go. So anyway, yeah. I had my alarm set. Normally I have a good biological alarm clock, and if I know what time I need to get up, I'm usually good. But today, I woke up at about 3 o'clock, and I couldn't fall back asleep. So about 4 o'clock, I got up and just said, I'm going to get some work done. And maybe I could take it a little easier this afternoon. Yeah, I'm still in and out. I'm trying all the home remedies and everything else. And I got a blood test done. I'm just waiting for the results. I've just been overly exhausted. Doctor says, you're overly exhausted. I'm like, yeah, I know. Tell me something. Anyway, let's talk about TAB29. Let's talk about precision trading. So a couple comments in general. This is going to kind of be the last of the follow-up, if you will. We're going to get more to looking at charts, and I'm going to get more into looking at your charts, which is the important thing. So I'm going to step up your ego challenges for your posting, because posted charts, will often be reviewed in these sessions. So it's time to just break bad with what you're doing. Get past your insecurities. Remember, guys, demo trading is about learning, not proving yourself. And everybody understands that. So, the group encourages it, and nobody jumps on anybody for their trading. It's a good place to flush out, well, I understand this. No, I thought he said that. And to get the definitive word so you can kind of, get your RAS, get your SIGs programmed. That's what you need to be doing at this point. There's still a lot of, and I get frustrated sometimes because I'll say something and, I see people just aren't, how would you say it? I don't want to say getting it, but, it's not resonating. That's probably the more political thing to say. The biggest challenge, and you just have to grow into it. So I have to back off some in my own thinking, and you have to have patience. You have to back off from the old paradigm way of thinking, guys. And I know it's tempting with all the, SOS and sugar and spice that's floating around, right? There's, so many sessions available now, and, that's good because you're getting lots of value. It's bad because there's a lot to be confused by, and there's a lot to be tempted by. And I eventually would like to see you guys, try other sessions, not strictly from a absolute literal interpretation of what, people are doing, other educators are doing, but to see what they're doing and to see how you could bring precision to it. One of the things, training, let me try and spit it out. Trading can be a very lonely activity, and therefore, besides making money at it, you want to enjoy it. You want to have a little variety. And that doesn't mean you're doing the Heinz 57 world of trading, because I still believe, from my experience and that of other successful traders, you need to focus on doing a handful of things and doing them very well and doing them, repeatedly. That's how you get better at them. And so you want to be careful in what you're saying. But as an example, I think I mentioned this the other day. One of the crypto instructors, we have a little different grouping there, and we're a little more organized and a little tighter than the Forex traders. And hopefully that'll come to the Forex trader group too. I'd like to see that. But, we've exchanged ideas and some thoughts at various times. And one, I was, heard some things about his methods, his strategies, and I went and looked at it, and it's really good. There's a lot of consistency to it, and so from a success rate, I think he's got a pretty darn good strategy, and it can be used for crypto. That's where he trades, but it can be used for Forex too. And so I was looking at it, and when you have the TAB29 to overlay on it, it doesn't really add significant gains in terms of accuracy, in terms of win percentages. Let me say that. He's got a pretty good screening criteria, and he has a pretty good high percentage win. But what TAB29 brings to it is we don't have to have, at times where he has bigger stops, we don't have to have those bigger stops. And so this is what's interesting. You can see a system that maybe it's 85, 90% wins, really high win system, and good, profit in most of them. But if you could come in there and on even just, half the trades, a third the trades, cut the stop loss in a third, instead of having to have that 25 pip stop loss, you could come in there with 10 or 7. That's 3 times the profit. And so this is the power of TAB29. It's not always going to change percentages, but it's going to give you more precise, TAB29 alerts. It's going to give you more precise entry and more precise exits. Okay. Now, remember, harmonic wave convergence is a science. We, at times, could force it into a trading model, but it's really a science. It's about waveology. And waveology, waveology is not going to come overnight. Waveology is going to come with time. And when I say time, I don't mean, come to a session once a month and take one demo trade, and in 3 months you're going to have it. When I say time, I'm talking about a time with volume of trades. And same as always, posting the trades, getting your feedback, learning what not to do. Everybody with me on that? Y'all are pretty quiet right now. I want to make sure the microphone is working there. All right. So, yeah, consistency. But there's good and bad in that. There's good and bad in that. And so you have to filter out the bad and look for the good. You want to, TAB29 is, I think the more you try and make it a closed system, the more you're going to struggle. Okay? Because it's not designed to be that. It can be, but it really works better as an overlay on other things that's already there, standard in trading. Fibonacci's. We could look at a few examples here. I've got live charts. Pitchforks. It brings such precision to that stuff. And so it's not a shortcut. It's not, oh, look at Steve, he's got this fantastic precision system. We do. But, pitchforks and Fibbo are going to save you so much headache as you use them more and more and more. And then learn how to guide yourself based on those tools. Scan's the same. But, I could go to, let's say this system I was looking at the other day, and I was playing with pitchforks with it as well. And again, it brings high degrees of clarity. It brings precision to what you're doing, and it gives you some guidance then. Of course, nothing's 100%. I was kind of playing with Wayne this morning. I sent him another TLA, one that I used heavily in Pip Club. I don't know if I used it that much in here, and that's vast majority of time with my VMT. The vast majority of time, you got that continuum of frequency from some of the time, to sometimes, to frequently, to very often, to, the vast majority of time, which is kind of almost all the time, but it's not quite always. Always would be 100%. The vast majority of the time, I'm typically talking bell curve at about 80 to 85%, sometimes a little higher, and I'll emphasize it when I say higher. So we want to trade with a VMT understanding. We're not going to win every trade, and every trade we don't win, that doesn't mean something's wrong. We want to learn the attributes of the trade that we took that didn't win and learn from it if there's something to learn. And one of the things to learn from it is this isn't the kind of trade I want to take again. So it starts forming your selectivity. The thing that I look at when I look at some of these systems that are out there, both on the Forex and crypto side, you'll notice they're true system models. Go to your 15-minute chart, and when price, does this and does that, and you got this and you got that, and RSI and blah, blah, blah. See, that's isolating one trade. It's isolating one trade. It's like if you think about quickfire, this is the kind of paradigm you have to kind of shift from. Quickfire is a standalone trade. But it sets the tone for things. And this is, as a trader, as you mature, you're going to learn scans. You're going to learn harmonic patterns. You want to know which ones are reversals and which ones are continuations. Even though they all reverse, but some of them are reversing to create a continuation, some of them are reversing to create a trend reversal. And then with bigger scans. Not that you're going to trade the bigger scan, but the bigger scan can give you insight to the smaller scan. Bigger pitchforks. You don't always have to trade the bigger pitchforks, but sometimes they give you opportunities downstream for smaller trades, because the smaller trades, the smaller moves are going to be compliant with that big pitchfork. And so what I teach is this science that can be applied to those standalone strategies, but gives you trades along the way. You very well may have a pitchfork And inside that pitchfork, trade 3 different strategies. This is the XYZ double Bollinger hit with stochastics and blah, blah. There's that strategy. You can see it clear as day on your 15-minute chart. And it's, the entry point is bouncing off a 4-hour fork. So by having the fork in place, it gives you some, and nobody has the crystal ball, but it gives you more insight as to where the market is going. Now, remember, we don't want to forecast. We don't want to get on that side of it. We still want to be reactive and responsive to what goes on. But it brings clarity sometimes to these isolated individual systems that are just there. I'm not saying those individual systems won't make money. Okay? But you're going to have a hard time trading something 6 hours a day that is an individual system. You'd be excited the first couple months because you're making some good money, but the problem is it's hard to scale that. It's hard to be excited about being on the charts every day. You want to make something some drudgery kind of experience, right? So what we teach is the road to mastery. And so many people will come, visit, and jump because, they want pips today. And there's nothing wrong with wanting pips today, but you want them tomorrow and the next day and the next day. And you want to just have this sense of comfort and confidence in what you're doing. And that's what we've got with the tools that we have. So I'm going to encourage some of you who might be on the fence, who might be, well, I'll give it a little bit more. Give it that little bit more. You are so close. It's not even, I'm speaking again, the vast majority of you. You're so close to having all this kind of come together. It's going to take another month or 2, depending on your level of activity. And it'll be so worth it because then it will come together. You will see how this all kind of fits together. So let me go back, to some of the questions. Most of the questions come from bridging from the isolated system to, this kind of confidence and ability to trade anything over any period of time. So kind of doing some deletions here so I can get right into it. Would love to know if there are particular techniques for the TAB29 alerts, or is it just a basic alert tool? I wouldn't say it's a basic alert tool. In most cases, there's always going to be a trade associated with an alert. Now, it might be pieces of 10, you might only get 3 or 4 pips, but there's almost always going to be a trade. The alerts you get to set, but we have the defaults, in the panel. And most of the time when you get an alert on a 10-minute trade, the only thing you have to look for is the bars to flip. Now, there's 2 ways of seeing that. You can see that as an isolated trade. I told you TAB29 can be traded standalone. And you can set TAB29 alerts and just trade, if you think about it logically, if you want to set up to say, this is one thing you trade. This is one of 100 things we can trade with TAB29. So let's say you're going to trade TAB29 alerts. Here's what I would suggest. If you're trading it standalone, so mind you, I'm talking about trading it standalone. If you think back, now I know my Pip Club traders have seen this little graphic 10,000 times, and you guys have only seen it once or twice. If we measure waves, and we get down to, or we get up to, depending on which perspective you want to take, the 10-minute wave, I can tell you that there are small waves, there are medium waves, and there are large waves. So, hey, Wayne, TPP, the perfect porridge. So the perfect porridge means when there's a variety of possibilities, which one's ideal? Okay, going back to Goldilocks, I guess, right? So the small waves for the 10-minute, well, let's go to the large, about 12 to 15 pips. Now, again, we're talking vast majority of the time. There will be extra large trades that are greater than 15. The smaller trades are as low as 5, maybe up to about 7 pips. And then in here, 8 to 11, in those ranges. Okay. So each one's a pretty tight little grouping, but yet we go from 5 to 15. And can you have the extra small? Less than 5? Yeah. But again, if we're going to talk the vast majority of the time, this is what we're talking about. Oops. I'll just, instead of taking too much time. Is everybody cool with that? What we're talking about is wavelengths and what the average wave does in this time period. Okay? So if I think, in terms of Elliott wave, and we're talking a 10-minute trade, realizing at the high end this might be, 12 to 15 pips, I'm typically going to think, this is going to be maybe 3 to 4. This is going to be maybe 3 to 4. And this could be, 7 to 10. The 2 to 3 wave is almost always the biggest wave in these moves. So if my strategy, think about this, my strategy is going to be TAB29 alerts for 10-minute trades. Not 30, just 10. Who would that be ideal for, by the way? What kind of trader would that be ideal for? To say, I want to trade 10-minute TAB29 alerts. Give me an example of what kind of trader. You all need to respond to this. This isn't just sit and wait for everybody else. You learn. I'm forcing you to think. If you're not going to put in an answer, you're not putting the effort thinking in. All right. So almost all of you are hitting it. Okay. Someone who doesn't have much time, a busy person, someone with little time, a scalper, a day trader, people who have a little bit of time, limited trading time, scalper, a trader with limited time, part-time, scalper, somebody working full time. I'll tell you who it fits is somebody who could sit down on the charts for an hour and a half. And if I'm going to trade TAB29 alerts, I can set up my layout and then from that, based on my experience over time, I whittle it down to the pairs I like for whatever reason. My first civilian job out of the Navy, I was working for this big civil and environmental engineering firm. And we had, as many offices do in the U.S., football season comes and we'd have football pools. It'd be like $2, $3 to enter the pool. And the pool, with the number of people we had in the office, almost everybody played it. It's like a lotto ticket, except you got to pick some things, So the pools were typically about $125 to $150. And I used to take one home, and, when I was filling it out one night, my wife was like, well, I want to do it. So, okay, give me $2, give me $3, whatever it was. And so I remember the first year we played, she won like 7 out of 11 out of the first 11 pools. And people were like, what the hell? And I'm like, it's not me. I don't give her one bit of advice. And all she did was she looked at the two teams playing, and the one that had, in her opinion, the cutest uniforms, that's who she picked. Yep, that's who she picked. And she won 7 out of the first 11. Out of the next, the rest 5 or whatever that was left, she won 1 or 2. She didn't get that many in the last. So, you find some reason to like the pairs you're trading. If you have good success with them, you just have vibes, if you like their DNA, whatever. But as a TAB29 trader, with 10-minute alerts, you could literally have 8, 10 pairs without a problem. Now, again, there will be times when they are also 30-minute alerts, when the 10-minute trade is also a 30-minute trade, and it's correlated with another pair, that you're going to get a lot of ding, 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 dings. So you just have to decide where that threshold is and realize, put your FOMO on hold. You're not going to catch them all. Pick one of them that's sounding off and trade it. Let's go back to our Elliott wave. So if I'm trading TAB29, there's 2 things we can concentrate on. One, where's the biggest bucks? And 2, percentages, accuracy, wins. So you surely can trade the entry and say, I'm going to trade the 10-minute wave until it gets to its opposite extreme. Oops, my pen goes crazy again. That's one strategy. But again, depending on the head game, you have to understand that with that strategy, how do you deal with your stop loss? What do you do when you're 5 pips up? What do you do when it starts backing up on you? What do you do if it fully reverses out? I'm kind of doing price and indicator in here at the same time. So you've always run that risk of being up 5 and then watching price come out. Next thing you know, you're -3. So, while you can trade extreme to extreme, convergence to convergence of the 10-minute wave, the safer thing to do is the pieces of 10 kind of strategy. Well, if I'm going to trade pieces of 10, think about it logically. Which wave has the greatest pips, and which wave is going to have the highest percentage of wins? Yeah, the 2-3 wave. So what that means is, in terms of price, as price is working its way down, and down here it gets below 15. Let's say that's our 15 line. As price drops low enough to send the 10-minute wave and the 1-minute wave below 15, ding, 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 we're going to get an alert. Now, all we have to do is wait for the green bars. We don't have to worry, we don't have to try and decide how far further down it's going to go. It'll figure it out. And when price starts going back up, and we've had the 1-minute wave, we've had the convergence, the 1-minute wave is now coming up, all we have to wait for is the green bars. Well, that's trying to catch the 1 wave. X to 1. And so you can eliminate this deep pullback. I mean, think if that 1 wave goes 5 pips, which would not be unnormal for a medium to large size move in totality. If it goes up 5 pips and it's going to pull back 61.8, it's going to pull back 3 pips. So now we're +2, hoping it goes up and it's not going to reverse on us. Make sense? Are you following me? Green bars are on the close. 2 pips, 2 to 3 pips. A lot of times, when you try and catch this entry down here, by the time you enter and pay the spread, you may never get to positive before this thing's coming back to the wave 2. And that's when a lot of you chicken out. You forget your RAS, your SIG forgets Elliott wave. And all of a sudden you enter the trade, and instead of going positive and it getting smaller and smaller, you're going negative. And you're like, because you end up entering up here. 2 to get in, pay the dealer, right? So now you can eliminate that head game, you can eliminate that anxiety and emotion, and wait for the 2 wave instead. You get the alert, you wait for the green bars, you wait for the move up, and then you want to see the pullback. And typically, not always, but typically you get your higher low for the next hook back. So during this pullback, there should be some red. It might not all be red, but there should be some pullback. We get a hook back here at a higher low. Green bars. So you got your safety valves here. Now I can enter the trade. The 1-2 wave is completed. And again, depending on pips, you may put your 61.8 on here. If it's just 5 pips, this is going to be they're going to be so close, it's not going to matter. So if I hit that 73% of the time odds of the 50-61.8 retracement, and I have green bars, now I have a shot at the biggest wave on the chart that's going to be in this move. And I'm chasing this now instead of this, and I'm chasing this without losing. So it's like, put all my little, hey, Wayne, Who wants to tell me what that one is? DTM. Yeah, do the math. Do the math, do the math, do the math. Yes, tab 29 is great. Yes, tab 29 is precise. But, let's use our heads. I mean, I'm the guy that created the system, but, so I'm not going to say it's bad, but use it where it stacks your probabilities. So if I have a job, if I have a family, if I could sit down for 90 minutes at a time or, even 2 hours, but that's it for the day. And I don't want to mess with stuff before that, and I don't want to mess with stuff after that. And I really don't care about doing pitchforks, and I really don't care about scans, and I don't worry about 8-hour Fibos. I can make a lot of money by trading tab 29, 10-minute alerts, catching the wave 2. 2 to 3 move. So that's just one of 100 things you could do with tab 29. It's there to facilitate your lifestyle. Now, somebody else may not be able to sit down for 90 minutes or 2 hours at one time. They may be able to put in 90 minutes a day, but it might be 10 minutes here or 20 minutes there. They have a schedule that their whole day is full. They can move some of that stuff around. Hey, if you've got to call a business client back, unless it's set as an appointment, you're just returning a call or something, you decide if that's going to be 1 o'clock or 1:30 or 2 o'clock. Maybe you have it on your schedule tentatively for 1 o'clock. Hey, call Zoe. But if you get an alert 5 minutes before that call and you need 30 minutes to enter a long-term trade, well, then you just postpone that call. You're still going to get the call done. It's just how you allocate this 90 minutes or 2 hours a day. Again, people's lifestyles are going to dictate that. And then we have everything in between. So this is why tab 29 is beautiful. I'm not saying this is what you should do for tab 29. Tab 29, 10-minute alerts. I'm not saying that's what you should do. It's one way you can make great money off the Forex with high percentage, no head game. Get in there, get it done, and be done. And if that's how you treat it, then how do you make more money? Put more pairs on, get more alerts. So that's one way of using tab 29 alerts. All right, let's think about some other things. What if I have a pitchfork? And it's a 15-minute fork. And price has had some good interaction with the upper parallel. I'm not going to draw all the tines of the fork. And now we're coming up here. Well, you can do pitchfork alerts if you want. You can have alert bar or alert line and put an alert on that line. So as price gets to the top of your fork, you can. But guess what? If it's really going to be a harmonic wave convergence trade, you can set a 15-minute tab 29 alert. Or a 10 if you want. And I don't need the line. I'll just wait for the tab 29 alert. What's going to happen? When does that fire off? As this is going up and down in multi-wave, tab 29, well, we're talking tab 29, as the 10-minute wave gets up past what? 85, if that's where you have your threshold set. Same deal. Price is making its way up. Ding, ding, ding. You're waiting for what? red bars. Go to the chart, see where it is in terms of your pitchfork, look for the red bars. So, you know, I can't have a 30-minute fork. I can't have a 15-minute fork. None of those can happen without a 15-minute convergence. It's a requirement. It's just this may give me some money management that's a lot different than just a TAB29 alert where I'm going to trade wave 2. This may give me some money management where I've seen consecutive times price had no problem getting to the median from the top parallel. So now maybe I divide this with Fibos, at least one, and when price finally gets past that, you know, I can move my stop loss up significantly. And this is my target. I could try, depending on the width here, I could try a 15-minute haul. I could use standard moves, you know, from the bottom of here to the top of here, and use those as horizontal retracements for targets. You have options. Find the options you like. I would say in this same situation, I would use the same money management over and over and over again so you get good at that money management. You get better at determining what targets you like. You get to determine whether you're going to leg down or take the whole thing and just advance your stop loss. A 30-minute trade versus a 10-minute trade, we're talking about the 30-minute wave converging versus the 10-minute wave converging. So as an example, in multi-wave down below here, you will have a 30-minute convergence down here and a 30-minute convergence up here. So that's a 30-minute trade. I call them 30-minute trades. They're 30-minute convergences. But along the way, that's a 10-minute convergence. 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 And that's a 10-minute convergence. So when you're trading 10-minute waves, these are the convergences you're trading. When you're trading 30-minute convergences, these are the convergences you're trading. So by understanding what harmonic wave convergence is, if you don't, go look at the videos at harmonicwaveconvergence.com. You have to understand what convergence is. You can't, by definition, have a 30-minute convergence without also having a 10-minute convergence, because it's the 10-minute convergence that creates the 30-minute convergence. When the 10 merges with the 30, that's your convergence. But you can have 10-minute trades all day long outside of 30-minute convergences. So you can use TAB29 alerts very creatively in any number of ways, and they're very powerful. We could create a robot. You know, TradingView does, there's a third-party product. TradingView doesn't have the ability to have a auto trade function. But if you're sitting staring at the charts and you got your trading station open, we can give you a signal that you're about to have a convergence and then tell you when to take the trades, because we know when the bars turn green. So we know precisely where the entry can be. And we can do that all through this third-party software that kind of plugs in. And essentially, That's a trade signal. When the bars turn green, after it's been down to extreme. The challenge is the beauty of TAB29 alerts are not a signal, but they're the pre-signal. You have to have the bar flips to take the trade. And you don't want to be cooking dinner and have a TAB29 alert and it be the entry. You want to be able to walk away from the kitchen for 5 minutes and see when the trade is. Or maybe you're out back by the pool with the kids and your trading station's inside. You're not out there with a laptop. You want to get the alert on your cell phone and have time to come in, sit down. Oh, yeah, I see where the alert is. Oh, yeah, I'm watching the bar. It's still on its way down or it's turning around. You know, when the green bars are there, then I'm taking my trade. So anyway, we programmed it. Now you can make them tighter. You know, if you want to move those thresholds to like 87 and 12 or whatever, you can do that. All right, so let me go back there. You have to put the TAB29 indicator on your charts. Give me a sec. So let me turn this back on now that I found it. So I have a chart. You must have the TAB29 indicator on your chart because that's going to interface with TradingView. If you don't have the TAB29 alert on your chart, we can't do the interface with TradingView. Once you have it there, you're okay. Now, we can go into that alert to the format button. You can see your thresholds, 85.15 for 30 and buys and sells on the 30-minute level, and then 10 or 15-minute sells, you can set it for 85 or 15. In 1 minute, you can set your threshold. So you may have different thresholds if you want. And yes, if you increase these thresholds, change the 85 to 87, realize 89 is the convergence point. If you change it to 87 and drop this 2, this one would be decreased to, let's say, 13, you're allowing less time for the convergence. Think of it this way. At the top end, as it's moving up past 85, and then you extend it to 87, you're getting closer to the threshold, which, okay. So as I come up, if I had the threshold set at 80 and it goes off there, I still have to wait for price to go up, converge, and come back down. It gives me more time to see it go up to converge and come down if I keep it shorter. The more I extend this, the more this time moves up. I get closer and closer to the threshold of the convergence. So I have less time to react. So if you're sitting at your computer, maybe you want to make that 87. Most other times I keep them here. I don't think you're going to want to get it too much lower than that to give you more time, because you'll have this kind of situation setting off alerts and they're not trades. So the defaults were not random. They were putting their, we got them there for the right reasons. Okay. So once you have this set, then under style, you have the ability to color what you want to color. We kind of default them to our standard colors: yellow for 10-minute, orange for 15, and blue for 30. You can change them, but I would recommend keeping them that way. You can also change the shape and where you want it to be placed. So anyway, I've got the TAB29 alert, which is really our interface. It's not the alert itself, it's our interface. Now watch this. When I go to any blank space on the chart, black space on the chart, and I right click, the first thing it says is add alert. That might be on a line, that might be on a, whatever. It comes up and it says condition. It knows we're on the New Zealand dollar. I don't want that. I want to use the interface that we have by having this indicator on the chart. So here I'm going to be looking for, look at this, tab 29. It automatically, TradingView automatically changes the alert package for you. So now you get to choose, oh, I want to do a 10-minute buy, or a 10-minute sell, or a 15-minute buy, or a 15-minute sell, etc. So if I want to do a 15-minute buy, the only thing I have to do here now is make this register with it. So I'm looking for a 15-minute buy. So when these both say 15-minute buy and that says 15-minute buy, we're good to go. If you're trading multiple pairs, down here, I would go ahead and put your pair in here for you. So if you're getting multiple alerts show up on your cell phone or on your screen, you know which pair they came from. And that's how you set a 15-minute alert. You can't set that alert without having the TAB29 alert interface on the chart. Yeah, you can create over alerts too. You can alert too much. The last thing you want to do is make yourself desensitized to alerts. All right, so the trend dashboard is just a vehicle so you know where the momentum is. And the key to it is listed right on the indicator. We made sure that the parameters were there so you know. And what that means is starting at the top, depending on which chart I'm on a 15-minute chart. This is my 15-minute trend, my 30-minute trend, my 60-minute trend. If you want to space these out, you have the ability to do that, but you don't, it's like you don't need to do that. Why would you want to do it? But I can do that to show you. And so what happens here is in this chart, that's my 15, there's my 30, there's my 1 hour or 60. We have a 2 hour, a 4 hour, an 8 hour, and a daily move. So right now, all of my waves in terms of trend are up except the daily wave. And when you go back in time in these, you'll see them flip. If the wave is turning, from when they're all red, one by one they're going to turn. The 15 is going to go red, then the 30, then the 60, because the daily is the slowest. So it's just a trend indicator to tell you which of the time period trends and which way they're pointing. So in a particular case, what I would say is today I would prefer to do buys versus sells. I'll take a sell, but the buy has more strength in it. This is the trend is your friend. It's not 100%. The trend dashboard is best on 15-minute and below. We can't take lower level waves and put them up there. That's why on a 15 you don't see a 1-minute wave. Ideally, the dashboard should be on a 10 or 15, depending on which time period you're trading at that range. And they work great on the 15 and the 1-minute chart, the 10 and the 1-minute chart. There can be no 15-minute wave on a 30-minute chart or 15-minute trend because we can't take data upstream. We can only take data downstream. So we can't take lower level stuff and put it on higher levels. We could in the Pro Chart days, but TradingView doesn't allow us to do it. So I want to show you, a few things. I'm supposed to have a session tonight, but the gal organizing all the crypto stuff, she sent me my graphic, my brochure, but it's supposed to be scheduled for tonight at 8 p.m. Eastern. My first crypto class. So I'm going to go over, some things about the new paradigm, stuff you guys already know, and I'll look at a crypto chart. I'll show you just a minute or two of that crypto chart. Hold on. It's a 10-minute alert, but we are watching. All trades are executed from the 1-minute chart. You can't see the bars flip on the 1-minute chart unless you're on a 1-minute chart. And you want that 1-minute wave, you want to see the peak of the 1-minute wave hit and bend, and after the bend, you want to see the bars flip. That's standard for everything. Standard trades, etc. Pieces of 10. If you're trading pieces of 10 in true form, and literally, then you're on a 1-minute chart. You're watching your 10-minute wave, but you're trading the 1-minute wave as it goes through its cycle. You want green bars. You don't need convergences after the convergence. You have lower highs, higher lows in the buys and lower highs on the sells. We like 2 to 3 pips for the bars to flip, and then we're in the trade. I'm deleting comments because I want to get all the questions answered here before I cut it out. When using TAB29 or trade entries take place on the 1-minute chart, yes, that's where you execute. Is it okay to move to a higher time frame after we enter the trade, a 10, 15-minute chart, and monitor our trade from there? Also, is it okay to use the trend bars and hook back on the higher time frames for our exit, or should we stay on the 1-minute chart? So much in that question. First of all, when you're at higher time frames, you're not going to have the precision you have at the 1-minute level. But the 1-minute level, you can't be overconsumed with the 1-minute wave because, it's going to cycle and take you out of stuff that, you may not want to get out of. Where you can more readily trade 15-minute trades, meaning where you can more readily trade from your 15-minute chart or your 10-minute chart, is when you're understanding your scale. And this is, kind of advanced stuff. I don't want to bomb everybody away. I see we have some newer folks in here. You know, just understand this is all going to come to you, and we're going to cover it many times. So it's rare as, who's here? Old Pip Clubber. Zoe, of course. Let me see if I see anybody else in here. I don't think so this morning. You want to start to adjust and remember something. Multi-wave and TAB29 are relative scales. They're relative indicators. Zero to 100. 100 to 0. Tops and bottoms. Tab. Tops and bottoms. It may say a wave, the 10-minute wave is at the top, or here we're 15. I don't have orange. The 10-minute wave is at the top of its channel, and we look at price, and there it is. And down here, oh, the 10-minute wave is at the bottom of its channel. Well, that might be there. That might be down there. All it's telling you is there's enough strength down where this thing should start to head back up. So this is relative to price. This in no way tells you what price is doing unless you have some consistency. So you want to kind of measure that, because it'll help you learn. We had a trade. Maybe we'll go look at it in a minute. And yeah, no, let me do it. Again, nobody be embarrassed, All right. So let's look at this 1 minute. Say what you have to see here is good clarity and everything, but you want to look at your scale. What's my scale on this? What are my channels sizing here? What's the distance between each one of those channels? I would recommend you put channel lines on. Very faint dotted lines. If you want to make them charcoal or gray and dotted so they're barely there, they're not going to interfere with anything, but you can see them, such as this kind of line. You want to have those on your charts because you need to know this. So what is this scale here on this chart? 1 pip. $110.70 to $110.71. That's 1 pip. $110.71, $110.72. That's 1 pip. It's just always going eek. So what that means is, as I look at this, I don't have to have to the pip touches. I just want to kind of see the channel that I'm trading in. And one can look at that and see, well, it's pretty consistent. Bottom to top. How many pips? 1, 2, 3, almost 4, about 3.5. That's too small to trade. If I get a successful trade and do a sell here because I get some great indicator, well, we'll look at this in a second. Check it out. Check it out. Check it out. This one a little different. Got a little lucky here. So, when you have a 4 pip channel and you're going to allow 2 pips for the trend bars to flip, and I'll just average it out and make it big. 1 pip to the broker, and you generally need to see some pullback on the other side. I've already got 5 pips. So I don't want to take trades that are going to end up at 0 if everything goes right. i.e., this is too small of a channel to trade. It doesn't matter what this is saying down here. This is a relative channel. It doesn't care whether this channel is 5 pips wide or 50 pips wide. The tops are going to be the tops and the bottoms are going to be the bottoms. It's a relative channel. So you need, as a trader, and this is true, this is nothing unique to multi-wave and TAB29. It's true for RSI, it's true for stochastics, it's true for MACD. Doesn't matter what you're using. You want to understand that this is relative and this is absolute. So the first thing I want to do when I come to my charts is make sure they're tradable. I don't care what else is going on in the indicator. I don't care if it's textbook look for the indicator pattern. If the channel's not big enough to trade, I'm not trading it. Does that make sense? Simple, but you got to learn it. Well, think about it. For 10-minute trades that go 5, 7, 8 to 11, 12 to 15, you probably don't want to trade anything much less than a 10 to 12 pip channel. Otherwise, you're just not going to, you're going to chew up all your time with entry, paying the dealer, and exiting, and not, you're not in this to make, look, if I make a trade and I end up with 2 pips because I did everything that I was supposed to do, that's okay, Charlie Brown dance. That's essentially a trade that went nowhere. You don't have those in the old paradigm. In the old paradigm, you have 2 choices. You hit your first target price or you get stopped out. You don't see somebody trading 100 pip stop loss systems with a +2. It doesn't happen unless what? They're violating their own system. There's just no way you can do it in the old paradigm. So I don't mind ending up with 2 pips. I don't mind ending up with 3 pips. That's okay if I did everything I was supposed to do and the opportunity for risk reward was there. It's just market conditions changed and TAB29 had me in there. Now it tells me to get out. I get out. Oh, +2, +1.5, +3. That's fine. I used selectivity. I did what I was supposed to do. That's just how, TAB29 is one of those 80-85% systems. It's not always going to give you 15 pips. But the beauty is you get to back out and it's not going to hurt you. It's that swing and a miss and it doesn't count as a strike. But I don't want to start out a trade where I look at it and my potentiality is 0. Or my potentiality is 3 pips. This is not worth my time. There's other opportunities where channels will open up. When the market gets slow, see, here's the thing that you have to understand. Good example here. You need to understand, and why you want to look at scale first. You need to understand, if I take out this and this, oops, a little higher, and that, you couldn't tell me if this is a 1-minute chart or an 8-hour chart. The only reason I would know it's not an 8-hour chart is because we don't put trend bars on the 8-hour chart. But I'm just saying. No, multi-wave can't tell us whether it's that. It's going to look exactly the same. Well, no, because this is spread out a little. You're going to see the 30-minute wave. But my point is, for emphasis, you want to know how big that candle is just by looking at it on the chart without having to reference over here. I want to know that that's a 5 pip candle, because if I know that's a 5 pip candle, I know that that's a 3 pip candle. And I know if that's a 5 pip candle, this is probably a 10 pip candle. And I know all that because over here I have my lines on the chart and I could tell how big they are, how big these candles are, because I've got lines coming across. That's why you want scale on your chart. You come to the chart, first thing you do, hey, grab your ink to go if you have it, write it on the chart. Get your text tool on TradingView, write it on the chart. 5. 10, 2, whatever it is. So you know what that scale is in your absolute price channel. Pieces of 10 is no different than a regular entry, other than the hookback doesn't occur at extreme. Ten-minute wave comes down and converges. The 1-minute wave comes down and converges. And at this point here, it turned green. Make this thicker. All 6 bars were green right here. There's my entry. Move up 2, 3 pips, and at that time, all the bars were green. I ride that until I get a hook back. Now again, that hook back may be at extreme, it may not. Doesn't matter where the hook back is. Doesn't matter where the hook back is. I stay in that trade until when? When do I stay in this buy? I want the right answer here. How do I stay in this trade? How long do I stay in this trade? No, not 2 pip pullback. Who's that? Zoe is the only one that got it right. Come on. You guys are giving me incomplete answers. You give me right answers, but they're incomplete. So we wait for the hook back, and we wait for the contra trade, meaning the bars have to turn red. And we wait for those bars to turn red because that's our sell signal if we were doing a sell. Remember down here, we didn't take it if one of those was red still. We waited for all the bars to turn green. That's when we knew it was safe to enter the buy. If I'm in the buy, I want to wait for the sell to exit. It might not be a trade to take, but I want to wait for the indicator to show me sell. In this case, that means the hook back and the bars to turn red, just like I had down here. It's just this had to be at a convergence point. This doesn't need to be at convergence. It can be halfway up. It can be 2/3 of the way up. It can be 1/3 of the way up. Hook back, red bars, or the 40% pullback. So from this point down here, I have a 40% retracement line here. So at the time this hooks back, 1, if the bars turn red, exit. If the bars are still green and I get to my 40% line, 2, that then becomes my exit. So it's hook back, red bars, or 40%. Whichever comes first between red bars and 40%. Now, so I'm out of the trade. I'm out of my buy. Price comes down. It doesn't matter where the hook back is. It could be low. It could be right here. It could be shorter. But I have a hook back and my bars turn green. I get to re-enter the trade. Yep, universal exit. 4 pieces of 10. Okay. Okay, got 1 or 2 more questions. I'll get them out of the way. Let me go back to the higher chart thing. So with scale, you can operate trades off higher charts. But now you're kind of doing a different strategy. You're kind of doing a different strategy because, you can go extreme to extreme, but let's look at this. I'm on a 15-minute chart. What's my scale? What's my scale? So these channels with the dotted lines are 20 pips. Again, I can, whoa. Doesn't have to be precise, just enough to give you a sense. The channel at its minimum is probably about 20 pips. Might grow a little bit more, but that's about it. So if I do a top to bottom move, or bottom to top to bottom, those should be convergence points. So here I could enter a sell. That's a multi-wave entry, not a TAB29 entry. So I don't like that. That's a TAB29 entry. So you can enter the trade and say, I'm just going to wait for the 10-minute wave to converge. There's your first one, not very big. There's your second one, better. You can trade these, but guess what? Not with a 2 to 3 pip stop loss. These are going to have to be at least half your channel. So that would be a full 10 pip stop loss. Not 10 pip calculated in trade 3 or 5 or whatever, but 10 pips for 10 pips. ESL, MSL. So as you move up in time frames, you have to increase your stop loss, but it is less headaches. You're trading extreme to extreme. You'd like to see these channels be a little wider for 15-minute trades. Just a tad wider. Because you will notice there are times you have a convergence and it doesn't go to the top. It only goes 2/3 of the way or 3/4 of the way. So if you're just going to trade extreme to extreme on these, you're risking a reversal. You can't do pieces of 10 on this very well without really expanding your stop loss. It's not designed for that. You can use trend lines and stuff like that to help you. Bring up one more chart. Make sure we got an understanding what's going on. Okay. So this was a sell. So the thing that you see by looking at the 15-minute chart is a couple of things. Remember, you can do trend lines anywhere. You can do it in price, you can do it in multi-wave, you can do it in tab 29. Oh my. Again, this tool isn't as precise and I can't get lines very thin, but let's look at that. So we don't want to forget that. I get the sell here. Wait. See, I get the sell here because that's a 15-minute convergence. But look, it doesn't go very far. Why doesn't it go very far? Why doesn't that sell go very far? Yeah, there's upward pressure. These are multiple opportunities, you know, one, then two, off that trend line. So this would have been a buy where the sell is being taken place. And that's because it took a while, you know, even on the 1-minute chart to give the signal to get in. And so at the time we're trying to do the sell, it's really a buy. Does that make sense? Yeah, it's going to turn into a snake. So you don't want to come into the charts and just get on the 1-minute channel and try and trade. Oh, Steve said to make your trades from the 1-minute chart. You execute the trade from the 1-minute chart. You want to see what the 30-minute chart and what the 15-minute charts are doing. The 1 minute's just for that very minute time you want to get into the trade. Does that make sense why that wouldn't be a good sell? Want to look at your 15 first. Good work on the, creative fork of BC. A little unusual, right? A little bit of compliance with it. But in terms of multi-wave, we're in the buy area, not the sell. This is a pieces of 10 kind of buy. Higher low, higher low, higher low, and on a trend line. Even without, that's how you see it in multi-wave. Tab 29. Technically a convergence, but we come to a higher low, meaning there's still upward pressure. So the higher low, green bars, there's my buy. I'll give you 5 minutes of a teaser, then I got to cut out of here. My throat's not going to last. I got several sessions today. So we have my long-running Bitcoin chart. We did this pitchfork. Not that one little wave. And you saw how well it held it. Of course, that circle has moved on me. Extreme upper parallel to the pip with a big wick, lower parallel to the pip with a big wick. Great to tune that fork. So now we've got a fork that we feel comfortable with. And all this other stuff then starts happening. Oh, extreme bounce. We talked about that. That's the 5.5 warning line. Have a good day. Yeah, don't try to. Watch that fog. Yeah. Back to classes. His Christmas break's over. He was so upset last night. Last semester at this college. You know, we saw a pitchfork 2.5 warning line be the bottom. There was some pretty cool stuff in here with these Fibonacci's. I introduced a concept that kind of, you know, if the record books want to show it, you're going to see me as the guy that does it. I've learned to split Fibonacci values on charts. That's how mid-warning lines came about. This is not a warning line per Alan Andrews. Alan Andrews only uses the solid, you know, 1, 2, 3, 4. He doesn't do midpoints, but over 10 years of trading pitchforks and warning lines, I've seen too many turnarounds mid-warning line. So I use mid-warning lines, and they're very powerful. You see another one down here, warning line, turnaround. And so right in here, this 44.1 generates the bounce. Again, the dang circles move. They don't hold perfect here. But you can see 2 bounces right off that 44.1. I drew this yellow pitchfork. It's, you know, I'm on 8 hours. This one shouldn't be orange, but I wanted to have the differentiation. So here's my 8-hour fork now. Let's drop down to a 15-minute chart. Powerful, powerful stuff here. These are yellow. These are my 8-hour Fibos. 50, 38.2, and my 44.1 hybrid. We have a pattern soon to be generated at IML with a crypto harmonic scanner. And you'll notice the D ends right on the 8-hour Fibo. If you trade that scan at 100% or go down at least to the A, there's your move. I want you to look at prices. 14.2 to 13.2 and less. That's a $1,000 move. Notice a couple other things. When we break down from here, we really break hard, but when it comes back up, totally stopped by what? The 8-hour Fibo. How many times do I say, guys, do your upper level Fibo work? 8-hour, 4-hour. And again, if I'm on 8-hour, I want it to be yellow. If I'm on 4-hour, make it green. If I have both of them on here, I can see both my 4-hour and 8-hour, and I know which is which. Another pattern, this was the deep crab. It ends beautifully with the convergence, of course, but it was a 1272 of the bigger move off to the left. So it was this is 1272 of an up move on the 15-minute chart. Harmonic wave convergence, 1272, pattern ends. Again, well, right in here, but 11250, 12750. $500. No, got me wrong. 11250 to 11225. 1275. Gosh, if I can write. 12750. 11250. So what's that? $1,500. Same technicals you guys are learning. Wait a second. Let's end it on a positive note. Not that that's not all positive. How do we execute this trade on my 15-minute chart? We don't. Hope you all can see that. Here's my scan. Look at this. 30-minute convergence. Notice the 30-minute wave working its way down. And then it's working its way up. 30-minute convergence, 10-minute convergence, 1-minute convergence. That right there is a 30-minute convergence. Wait for the bars to turn green. Enter your trade. TAB29 scans cryptocurrency. I don't know how many pips these are dollars. These 8-hour Fibos created over the length of this pitchfork in this chart, but they're still hot. Look where this trade ends. 38.2 Fibo from my 8-hour chart. Now, personally, at a 30-minute convergence, especially with crypto, you can let it ride to the 30-minute convergence. Personally, this would have been enough because I've seen the compliance with it, and it semi-tested it once, came up here, tested it to the pip. That would have been my exit. I didn't take this trade. Nah, I'm not getting a lot of ooh-ahs. I've spoiled too many people. So this is why it's worth it to learn the stuff. Don't try and rush from one thing to another. I've got people new, and it's like, they get the link to the pitchfork course on Friday, and Monday they're telling me they're going to start quickfire. And I'm like, I haven't seen a pitchfork from you yet. Go draw 50 forks. Let's get them down. So you know how to test them. So you know how to balance them. So you know how to draw them. Learn the stuff by doing it. Don't just try and intellectually or academically learn it. Yeah, I went through the modules. I know what's going on. That's not knowing it. You got to go do it. It's like that little meme I put up the other day, right? Be, do, have. Be, have, do. Be, do, have. You got to do it. The do it part's good. You got to be the student, then you got to do the work, and then you'll have the money. So no rush. We've got a curriculum here. If you're newer and you haven't been through everything yet, don't rush to get through it. we're not going anywhere. You know, that's what the beauty of both the recorded sessions and a Facebook group is. You have the support online no matter when you come into this group. There is a group that's kind of moving through. You know, this is the 10th session, you know, and it's originally designed for the people that were there from session number 1. But it doesn't mean if you came in today, you know, I might attend today, but I wouldn't get overwhelmed. I wouldn't just go, oh, this is too much. Is this too much for all of you who were here since session 1? I mean, I'm not saying you could do exactly what you see here, but you know, to follow the concepts. If you've been here since session 1, we've had, even though it's been fast, it's been it's been segmented. And that's the beauty, is you can always go back. So we're doing a build. We're doing a build. And the nice thing about using a build methodology is you can come into it at any time. What you see here in step mode, and I'm not going to explain all of this today, I'll just get into it. This is my 30-minute haul. So you can see it's not until we get even in this zone here that the 30-minute haul is finally turned in my direction. Nonetheless, start going against me. So a player who wants to add a little bit more risk and doesn't want to and stays in beyond this point, you know, realize that. But what is this? So you'll notice these flips on a 30-minute haul can only occur on the hour or half hour because it is the 30-minute haul. And we only take the 30-minute haul as an exit, what? On a 30-minute candle close. So we can't have the 30-minute haul flipping. Let's say this green bar, this green flip here was at 7:15. All that's mean, see, we've prevented that in how we program the 30-minute haul to come down to the 1-minute chart. We're not going to show it to you. It might be green here for a second, but we're going to keep it red because you have to wait for the half hour or the hour in order for a 30-minute flip to be valid. So we have the flip, we're good. That would be, you know, if we were in the sell, that would be our exit. So it's nice to have that 30-minute haul on our 1-minute chart. It helps us in some of these situations. You say, I might stay in. The 30-minute haul just flipped in my direction. Even after all this pullback, I still have the upward lift calculated by the haul still says at this point we have upward move to go. It's kind of nice. If you go into the Facebook group, and you go to files, there's a couple files in there. One of them is the Precision Traders Resources PDF. And when you open it up, if it'll open up for me, it takes a while to process. It has all information and training. Here's the pitchfork course. Here's Quickfire Charlie Delta. Here's the special divergence video. Here's talk about the green line. TAB29 trading, Telegram alerts. Now we keep scrolling. Now we get into the live sessions that we've done. 1 through 8. I put the video out for 9 the other day. I'm having trouble saving this as a PDF until I reboot, and I'm holding off on doing that. So the next thing, this document will be updated with session 9 and session 10. Here's the links to the old videos or the previous videos for these sessions with a abbreviated topic. All right, I'm going to wind it down there. So hopefully I answered all your questions. You got a little tease of crypto, but you see the advantage of doing your, see the thing I'm teaching is not just a system, guys. That's why I said at the beginning, such a, that 8-hour fork, that 8-hour Fibbo on the big move on the 8-hour chart. Price is still honoring those Fibbos weeks later. And where's the guy with the independent system today? I doubt the 15-minute scan trader or the 15-minute system trader has 8-hour Fibbos on their charts. They may have supply and demand zones, S&R that are 100 pips wide. That's not going to help precision traders. All right, we're out of here. Look, that's a big commitment for you guys to show up at this time, whatever time it is for you. It's early for me, and spend almost 2 hours. That shows commitment, and it's going to pay off. It's a big sacrifice, but it's going to pay off. You're not going to get everything all at once. Don't feel overwhelmed because you don't. It takes repetition. Ask Zoe. All right, I'm out of here. And remember, I know you guys see me multiple times a week, but I'm going to say it every day. I don't care. Life can be short. So for those people you care and love, let them know you care and love them. I love you guys. You're a hot group. I'll see you Thursday night.